So thanks for having me. It's great to be here. Lots of familiar faces and lots of new faces as well. And the content of my presentation is going to be a little bit about auditing and a little bit about accounting. And many people here involved in public companies see that the audit fees are probably taking a pretty big component of your operations now. And what I'm here to tell you is that we understand that money is tight, and we know that fees need to be cut down on. And the goal today, from my point of view, is to hopefully give you a few tools in place that will enable you to get that audit process to be a little bit more efficient. And what are some things that you can do, whether you're an accountant, a CEO, or a geologist, or a lawyer, to sort of be part of that process. And at the end of the day, as Jay mentioned, all of us professionals, whether you are a lawyer, an accountant, or a geologist, or a promoter, or with the exchange, or with the BCIC, we're all in this together. And so we're going through a bit of a tough time right now, but if we do cooperate and get conversations going between one another, then we do have the possibility of implementing proper systems in place so that when things do return, and they will return, we're well prepared for it. So hopefully today is one of that big dialogue that we can all have with one another, and in a way where we can understand each other, understand we have differences of point of view, and how can we work together to make things more efficient. And that's what I'm here to talk about today. So first off, anybody know what the CICA Handbook is? For those accountants here. So the CICA Handbook is where us accountants, that's where we go find our information. So anything to do with accounting or auditing regulation, we go on this software, and just like a Google, right? You type in, how do I deal with derivative instruments? So what I'm encouraging everybody here today, if you're not an accountant, or if you are an accountant, get one of these. Because as you can see, you can go online and you can buy this thing for $230. And you don't have to be an accountant. You can be a lawyer, you can be a geologist, you can buy one of these things. And the reason why I'm encouraging you to do so is because one of the biggest hurdles that we find in auditing is that we're having to solve a lot of the accounting issues. So what we're encouraging clients to do is, why don't you take a shot at it? And what that means is that go on the software, type in the accounting issue, and write a memo on it, and then conclude on it. Now, a lot of people in the room might say, well, why is that my place to do that, or why should I'm the one who should be doing that? Because if you do that, right, or if you encourage somebody within your organization to do that, your accountant or your CFO, and you prepare a memo on the issues, you probably have a 95% chance of being right with your conclusions. Now, if you're not right, we'll look at it and we'll tell you it's not. But if you go through the process, it'll save a ton of time. So instead of getting us to figure out your accounting issues and the resolvement of it, why don't you take a shot at it? And as you know, if we do that work, we're charging by the hour. And if we're charging by the hour, that's what it runs up. So get a copy of the handbook. It's not that expensive, and you can figure it out. Everybody in this room probably has done a Google search on something today, and so we encourage you to do that. So that's step one. Read the handbook. Step two is start thinking about preparing working papers. So for example, you or your accountant or someone within your organization is preparing a balance sheet, right? And that balance sheet has accounts on it. It's got cash, and it's got receivables, and it's got mineral property. So we need to figure out, in our opinion, if those numbers are fairly stated. So you need to prove it to us. So what you could do is you could prepare a binder, and that binder will have cash and the supporting bank statements and everything behind it. So if you come into the audit and you say to yourself, okay, I'm going to prepare this binder for the auditors and get all that information for them ahead of time, it's going to save them from asking me to prepare all these working papers. So the more you do, the less we do. The less we do, the less we charge. The less we charge, the less you pay. And that's the idea behind it. So that's point number two. The third point is interim auditing. And that's something that we're looking to push more this year. So how many people here are involved in companies with calendar year ends, i.e. December year end? Just a quick show of hands. Quite a few, right? A lot of companies have either December year ends, or you may have a March year end or a June year end where you've got a quarterly set of statements. So what we're saying is, let's start this conversation now rather than in February. And by beginning this conversation now rather than February, what it will enable us to do is to figure out the issues. So say, for example, we're at September 25th today. And if we got together middle of October and then started saying, well, here's what we did this year, And then as auditors, I'll look at you and I'll say, okay, well, that probably means here's a significant risk we have to deal with. How do you think we should deal with that? And then you give us your input, and then we talk about it and we make a plan. So if we make that plan earlier on in the game, then come February, March, we don't have to deal with the things that we could have dealt with long time ago. Now, I can tell you in the audit world, and probably many other professionals could attest to it, most of the time gets built up at the end. Right? That's when partners always come in and everybody spends too much time. So a lot of that cost gets ramped up right around deadline time. So the idea of starting interim auditing is to get ahead of the game and start those conversations earlier on. Now, the one comment I've received not only from clients but people who I work with internally is that, well, there's a perception that that's going to cost more, that we have to come in and do an interim auditing at the beginning and then later at the end and so on. And we're here to say we don't believe so. We think that if we spread the work out as evenly as possible throughout the year, no matter what size of organization that you're in, it'll help you. Even if you're a smaller junior mining company, and you may think, well, interim auditing, we could just deal with all at year end. At least if we get together ahead of time, at least if we talk about a plan and create a schedule and just make everybody accountable for the various tasks, then we can get to that point. So we're highly encouraging interim auditing this year. And we don't want to just call you call us too. And you can tell us, hey, we got a December year end. We haven't done that much this year, but here's what we foresee as being the issues. What do you think? And then we'll get together. We might invite you for lunch, and then we'll go, okay, we agree with you, and here's what we're going to do about it. And here's who's going to do what about it and by what time frame. So the idea is let's get those conversations earlier on. And that falls into the next part, which is really ultimately the planning meeting. And the planning meeting is really the spot where we all get together and talk about the plan. And it'd be nice to get together in person too, because then we can see you. And while email and phone calls and all those things are very useful, I use them all the time, there's nothing more engaging than the face-to-face meeting. I mean, every conversation that I have, whether it's with people in my personal life or in my professional life or colleagues, I accomplish so much more when we talk. And I mean face-to-face, like seeing each other, right? I mean, it's kind of like here, you've probably seen or will see some people, you look at their name tags and go, oh yeah, I remember, I've heard about you, you're that guy, you're that girl. So let's get together early on in the process and talk. And that's the part about the planning meeting. So then you look at those four things and you say, and it doesn't have to be just for accountants, right? If there's CEOs here and there's geologists here, but we'd encourage you to speak to the people within your organization and say, whoever your auditors are, just say, let's get together early on with them, and then let's make a plan together. So those are the four things that we would encourage of things that you can do to streamline your audit costs. Because times are tough right now and cash is tight, even for companies who have money, everybody's looking at it, right? Even the majors are looking at cost controls. So in doing so, we're able to streamline those costs. And the thing is that in the last 10 years, regulation has increased. Auditing today isn't like auditing was 10 to 15 years ago. I mean, things have just changed. The problem is that we're probably going through this sort of mining recession that's bigger than it's been in the last 15 years. So we got to do all these procedures, and monies are tight for cash, but we still got to do these procedures. So how do we get to that point where we can still meet the standards, still meet the regulations, but at the same time not charge you an arm and a leg? And what the message is here today is there's some things you could do internally to get there. So get a copy of the handbook, look at your accounting policies, read them, and then see if anything's happened this year that might cause an accounting issue. If you think there is, yourself or somebody within your organization, have them do the research, print up a little memo, do a conclusion, and present it to us. And it's very likely we'll agree with it. Prepare some working papers. If there's a number on your financial statements that requires audit, think about what am I going to show Erez to prove that number? What backup do I have? Interim auditing and planning meetings. Let's get together early on in the process, and we'll push everybody to do so as well. And let's get that conversation going earlier on so we don't leave up all the majority of the work until March and April, where all that time gets built up. So moving on from that is the last comment on that slide, which is streamline your financial statements. One of the things that we often see is financial statements are long. I mean, they're just really long. Like, I don't know if the last time you've looked at financial statements of like a Facebook or a Google or so on, but they're just about as long as most of your financials, which is okay. But the thing is that there's a lot of information in these financial statements that are not necessarily needing to be there, especially on a quarterly basis, and I'll get to that in a moment. So with financial statements, there is a tendency to look for other examples, and let's use their example, and we all do that. But the more you put into financial statements, the more we have to read. The more we have to read, the more comments we have to give you. And the more comments we have to give you, the more things you got to fix. And then everybody, I can't read that guy's handwriting, and why is he making me put the comma there or the punctuation point there? That's more of a lawyer comment actually than accountants. Lawyers do that a lot better than more than accountants. But sorry, John, but gotta knock each other a little bit here. And so only include stuff that you need in financial statements, right? And on that one, so a little bit about accounting. What can you do in your financial statements, both on a quarterly and on an annual basis, that can streamline the process, maybe cut down some of the information and provide useful information? So here's sort of the big hot buttons these days, right? Going concern. Anybody know what going concern means? Going concern? Any? So it's a funny term, right? And I don't know why accountants came up with it, but the idea of a going concern, and you may have seen it in auditors' reports or in the first notes of the financial statements, means basically we're concerned that you can keep going. That's really what that means, right? It's a going concern. So we're concerned whether or not your company is going to be able to keep going, and how concerned we are is going to translate to what sort of disclaimer are in your financial statements. So if we have a big concern, then you'll probably see language such as, you may have substantial doubt to carry on operations, right? And then if we don't have a big concern about your ability to keep going, then it'll be a softer touch. And so one of the things that we always struggle with as auditor is how much language do we need in that? And how much language we need in that depends on your ability to continue for the next 12 months. So if you think you've got enough cash for your operations for the next 12 months, assuming your mineral expenditures and your administrator overhead, etc., then prepare a little budget for us. Most companies prepare budgets, and if you don't, prepare one for us and show us, here's how much cash we got. Here's our operating expenditures expected for the next 12 months. Here's what we're going to think we're going to spend on mineral property. Here's what we think we're going to raise, and here's the net. And therefore, Mr. Auditor, we think we're going to be able to continue for the next 12 months. So soften up your language. But we need that from you. And from you or somebody from your organization, you need to show us why you've got enough money or why you don't have enough money. And that will depend on the language. So that's a big hot button, especially in the junior mining industry. Another one is financial instruments. Whether or not you've only got cash or payables, you've probably seen financial statements that have pages of notes on it and relevant disclosures. So that's a big area that transitioned into IFRS. So that's a hot topic. Another one is emerging markets. A lot of junior mining companies have operations in foreign jurisdictions, and many of those are considered emerging markets. And by the way, emerging markets, and I don't want to speak on behalf of the TSX or the BCSC, but effectively, if you're outside North America, Australia, or Western Europe, you're viewed as an emerging market. Now I know there's certain standards on what actually qualifies you as an emerging markets for regulatory purposes versus accounting purposes. But if you do have a mineral property outside of Canada, then start thinking about some of the things that we're going to need from you. And those things are, for example, how do you make sure that you've got people in place who speak the local language? Does your CFO or CEO have familiarity with the culture and the norms that happen in that jurisdiction? If not, that's okay. But what are some of the things in place that makes you comfortable that your operations in an emerging markets are well handled? So what are some of the big ones that are out there right now? So on quarterly financials, we often see quarterly financials that are, again, quite lengthy, and lengthy in the sense that a lot of our clients, for example, take the year-end financials and then they just roll them forward. And then we say, well, we don't need all that information in there. And the comment we often get back, well, it's just easier to roll forward rather than to take all that out. But effectively, when you prepare your quarterly financial statements, or an individual within your organization, all you really need to show is anything significant that has occurred since year end. So if your year end, you've got your audit financial statements out there published, and Q1 was just status quo, you can take out a lot of things. For example, you could take out your accounting policies, and you can make a statement saying our policies are consistent with the year-end numbers. You can take out things like income tax notes. You can even take out equipment notes if you haven't had significant changes. And the reason why that might be beneficial for you to take out unnecessary information is A, you have less to read. And if you have less to read, then your auditors have less to read. If your auditors have less to read, your board of directors has less to read. And so does your audit committee. And effectively, so does the TSX and the BCSC. So include the relevant information you have in there, but don't include stuff you don't need. Because if you include stuff you don't need, you might get questioned on it. So we'd encourage you to only include what's necessary in quarterly information, which is only what's new from year end. So that's it on that. Just a couple quick points. Given these times, there is a possibility, and we're seeing a lot of that, of company A combining with company B. If you're having a merger, then figure out what your financial statements requirements. One of the biggest issues that we currently see out there is people's view of what's a business versus an asset. So, for example, if you're company A and you're buying a mineral property, is that considered an asset or is that considered a business? The reason why that's important is because if it's considered a business, you may have to file a business acquisition report. And if you do, then that might need to include audited financial statements of target company. So when you are contemplating a purchase, whether it's a mineral property or another company, start talking to your auditors, your lawyers, and the TSX about what are you actually buying. Are you just buying a plot of land that's going to have grassroots exploration? Or are you buying a plot of land that has a plant in it already and has employees and certain structures in place? So get some of those things earlier on. So sort of to summarize, there's probably two main things you can do with your auditors. From the auditing standpoint, get a copy of that handbook. You'll see you can use it. You can just do search words. You can look at accounting rules and you can read them, and it's fairly plain English, and you can make your own conclusions and they'll likely be correct. You can talk to us earlier in the process, encourage interim work in order to avoid a lot of that ton of work at March and April where a lot of the cost gets ramped up. Get together with us early. Let's get together in person. Tell us where you see the risk. We'll tell you where we think the risk is. Let's make a plan on how to deal with it. Let's delegate tasks, and let's draw a timeline. Because if we draw a timeline, then we set goals. And if we're setting those goals, we're likely to get there than if we don't make those goals. That's on the audit. On the accounting, look at your quarterly financial statements, look at your annual, see what information might be there that doesn't have to be there because you might have taken it from another example. Think about whether or not that information you have in there is relevant to your users. And then lastly, if you're contemplating a transaction with another company, talk to your professionals earlier on and figure out whether or not it's an asset or a business. So that concludes my little bit. So thank you for your time and good to see everybody.